Hello, I'm Sarah Allen and you're watching The Pitch. Today, we're going to talk about sub-regional retail assets and why there's a big opportunity in this space. To help me, I'm joined by Mark Vonic and Linda Rudd from Realside Property. Mark, Linda, welcome.
Thank you.
So to begin with, Mark, I'm going to turn to you. Can you explain what sub-regional retail assets are and why there's an opportunity here?
Yep, so the term sub-regional refers to size, so it doesn't mean a non-metropolitan area, but it's typically a 10 to 30,000 square metre retail facility. It usually is anchored by a supermarket or two, a discount department store, a Kmart or a Big W. The reason that we're quite interested in this sector at the moment is that they often sit on quite underutilised parcels of land, very large parcels of land, that service as car parking. So we see them as real genuine infill opportunities and a sector that creates a lot of optionality and interest from our perspective. And finally, it's actually repriced to a point where it's the most attractive from a yield perspective. So institutional capital is looking for liquidity and that's created an opportunity that is repriced that makes it very attractive to groups like us.
Linda, how do you approach selecting an asset in this opportunity?
So as Mark mentioned, we've had a strategy to look for sub-regional retail centres for probably the last 2 years. So any site that has that is land rich and can provide an opportunity to deliver upside, whether that's through meeting the needs of the local demographic and providing housing, medical, an extra supermarket, any other retailer that we feel fits the requirement of that area. But also we look at centres that are already high performing that we can then add some value to. So that's through tenant remixing, repositioning, again introducing new retailers, anything that again is suitable for that area and that asset.
So you recently acquired a 100% freehold interest in the Maddington Central Shopping Centre. Why this particular asset? What did you like about it? The
centre performs very, very well. So it's anchored by Coles, Woolworths and Kmart, all over trading. So about 138 million in aggregate turnover. The centre in and of itself is about 200 million in turnover. So we see that as a highly performing centre. And the reason for that, one of the reasons for that, is its population catchment is twice the benchmark average. So there's 200,000 people that live in this catchment. So that creates a very large underlying demand from customers. The other reason we like this asset is the underutilised land component. It's a 30,000 square metre centre sitting on 130,000 square metres of land. And what's really interesting about the centre is not so much what's there, but what isn't there. So it doesn't have medical uses, it doesn't have a childcare centre, it doesn't have any pad sites with any of those food-related uses. And then the other final point, which again piqued our attention when we started looking at this opportunity over 12 months ago, was that it's 600 metres away from a train station. And so Perth suffers from the same housing issues that every other capital city has, limited supply, increasing rents. And so there's a real urban infill regeneration story around this asset that we're really excited about. It's very rare for us to find a well-performing centre with so much optionality.
Linda, what returns are you targeting with this asset and how are you looking at transforming the centre to achieve this?
So we're buying this asset at a cyclically high yield, fully leased at 9%. So across our 5-year investment hold, we're going to be delivering 8.5% cash distribution to investors, and we're targeting a 15.5% IRR. And that's before the transformation, so that's really the base case. We've got a strategy to access and, as Mark had mentioned, capitalise on that surplus land. So looking to add medical, looking to add another supermarket, looking to add some pad sites, and then looking to unlock again that surplus land, whether it's residential or other uses. So that's really how we're going to transform the centre and drive that upside return.
And how can investors gain exposure to this asset?
So we work across an investor base that includes high net worth individuals, family office and wealth advisors. And so if investors are interested in getting access to this opportunity, they by all means can reach out to us and our team to talk them through the opportunity in more detail. It's worth noting that we work with sophisticated investors. We're a wholesale unlisted property funds manager, and so long as they do pass the sophisticated investor test, then of course we can talk to them.
Thank you both for sharing more information about this exciting asset. If you've enjoyed this interview, please subscribe to Livewire Markets. Thank you for watching.